As we're getting some earning results coming in after the bell, starting with Ulta. Let's take it over to Jared Blickery for more on that.
That's right. First, a note on the stock movement. You can see it's slightly down, but it's been both green and red. In fact, it initially slipped 6% to the downside. Here are the fourth quarter results for Ulta. Net sales of $2.73 billion, slightly higher than the estimate of $2.69 billion. EPS coming in at $5.41 versus the estimate of $4.60. Gross margin also a small beat here, 37.6%, 1 percentage point over the estimate. And then merchandise inventory, they ended with $1.50 billion when the estimate was for slightly lower, $1.45 billion. And then the total location count ended at 1,308. That's up about 0.5% quarter over quarter. The estimate was for 2 lower than that, so not a big addition there. Net new stores were 6, and that met the estimate. Now, I have a quote from the announcement. The beauty category is healthy and growing, and we are confident that the recovery that began in 2021 will continue as consumers maintain their self-care routines, become more resilient to COVID surges, and engage in more leisure and social activities. And on the earnings call, I think there's going to be some questions about their recent announcement that they're going to be expanding their locations in Target stores to 800. So that would be an increase of 250 this year. So again, some beats all around on the key numbers here for Ulta. And you can see the stock now, it's up in the green for about 2.5%.
All right, Jared, I'll take it from here. Great stuff there. And want to switch gears here as well as more earnings continue to pour in. I'm going to switch gears and go over to ORCL is the ticker symbol, and they are declining in after hours trading by a little more than 6%, roughly 7% as of right now for the company Oracle. And it is on a miss on EPS that came in at $1.13 a share versus the $1.16 that was expected. The revenue that came in roughly in line with the estimates, $10.51 billion. Is what we saw on the total revenue side for Oracle. Cloud revenue, which is some of their infrastructure as a service and software as a service, that came in at $2.8 billion. That's up 24%. And then additionally, as they break out their Fusion ERP cloud revenue, that was up 33%. NetSuite ERP cloud revenue up 27%. So let's just make sense of this at the broad scale of things. Cloud license and on-premise license revenue, that came in at $1.29 billion. That's slightly higher year over year. And then additionally, you had the hardware revenue come in at $798 million here. Do have a statement from the company here as well. In Q3, Oracle delivered over 7% constant currency revenue growth, highest quarterly organic revenue growth rate since they began their transition to the cloud. That coming from the Oracle CEO, Safra Catz, also cited the strong top-line growth coupled with solid non-GAAP constant currency operating profit growth of 4%. They're saying that the big story is the overall revenue growth being driven by both a rapidly growing cloud infrastructure and cloud applications business as well. So continuing to keep a close eye on shares of Oracle in the broader context of where shares are moving and after hours trading, as you're seeing them sitting at about $71.86 as of right now. Let's remember the 52-week low for this company is $65.43. So depending upon what is said on the earnings call and after hours trading, we could see them still remain in this broader kind of range-bound space that we've seen them in since the move from some of those highs back in late December, we'll say, mid-December, we'll say. But this also comes with the broader theme of what we've seen in the cloud space. SAP, CRM, most notably, CRM well off of some of their most recent highs, Salesforce.com, of course. So we'll continue to track all of these companies extremely closely. But Oracle shares in after hours trading moving lower by about 7%. And we'll see what the company has to say on the earnings call coming up. And everyone, also want to continue with some of our earnings coverage as well here. I believe we've got even more from Jared Blickery. Jared, I believe you're standing by for more on Oracle and the comments here.
Just wanted to give a quick look at the chart here. If we can go to the Wi-Fi Interactive, only take a minute. If you take a look at our heat map, and this is our software heat map for the day, that green spot in the middle, that is Oracle. But as you've been talking about, Brad, the share prices have been depressed. In fact, they traded down to 70 and change, which is actually that low from late February. So kind of dangerous territory here. And you take a look at the 2-year chart, really we've entered territory that we haven't seen since about a year ago. So as you mentioned, Brad, the 52-week low, somewhat lower in here, and we can bet shareholders will be tuned into that call and the open tomorrow.